All right, Fed rate decision today. Alert, the Fed will announce its rate decision today. It's a done deal that we will see a quarter point hike in the Fed funds rate to 2.25%. That will be the 8th time since December 2015 that the Fed has raised rates. And I will remind you once again, the dollar is lower, gold is higher. Even with the big correction that we have seen in the last 5 months, the economy is stronger, the stock market is higher, inflation is higher. Okay, so all of the things that are believed by most people, and that includes the Fed itself and central bankers themselves, such as that rate hikes squash inflation, rate hikes are bullish for currency, etc., etc. Rate hikes are bearish for the economy, etc., etc. All those things are wrong, and they are absolutely the things that I have explained in detail many, many times here. And of course, the correct understanding is the way that I have described it many, many times here. It's all the opposite of what the mainstream belief is. Now, if you are looking to do something in the market today, I will tell you that the focus, because everybody knows there's going to be a 25 basis points hike in the Fed funds rate, that's a done deal, okay? That's not going to be a surprise. But the focus is going to be on the Fed statement, and then following that, I think about a half an hour later, you're going to have Powell giving a news conference, a press conference. The Fed statement, everybody will be parsing through the language to see what the Fed's forward guidance is going to be. I mean, are they still saying another rate hike this year and then maybe 3 more rate hikes next year? Are they saying they're going to slow up? And then you have that, what they call the dot plot. That is, it's basically like a guess among the FOMC members where they expect interest rates to be in a year, 2 years, etc. Everybody looks at the dot plot to get some sort of insight on the mindset of the Fed members as to where they see interest rates. Now that is not something that dictates policy. That's their guess. And I mean, we've seen many, many times where central bankers are no better at guessing the forward outlook. Number one, they're no better at guessing the forward outlook of anybody else. Most economists are wrong about that. And number two, they don't even have their policy correct. I mean, they don't understand that raising rates increases inflation, which causes them to raise rates more. So, I mean, I look at that with a grain of salt. In other words, if the dot plot comes in weaker, and some people are saying it could come in weaker because there are several new members to the FOMC who are noted monetary policy doves. If it comes in weaker, you're going to see the dollar go down, you're going to see gold go up, you're going to see stocks go up. If it comes in stronger, if they come in with a hawkish statement saying, yeah, we're going to keep on raising rates, you're going to see the dollar rally, you're going to see the gold go down, you're going to see commodities go down, you're going to see stocks go down. But that's an opportunity to go against that. All right, so again, the trade here is to basically to fade what is going on. As long as they don't come out and say, hey, we're done, or we're going to stop for a while, if that happens, that sets up a whole new scenario. And you really have to get my report and follow along to understand what that means, because there's money to be made. There's big money to be made on understanding that macro scenario. By the way, you can get my report by going to pitbulleconomics.com and signing up for a 30-day free trial. You'll be immediately on the email list, and I will send an update right after the Fed decision to tell everybody what to do or what the analysis of the decision and the statement and the comments by Powell. So yeah, we're going to have that. See what happens. Again, 7 rate hikes, dollar is lower, gold is higher, economy is stronger, growing faster, stock market's at an all-time or just off an all-time record high. You're going to have 8 rate hikes. Same thing's going to be happening. All right. Now, the immediate reaction, that is the reaction today or maybe for the next several days, that might be a zombie reaction. If they come out very hawkish, it's very, very easy to predict what the zombie reaction is going to be. But that is not going to be the lasting reaction. You have to understand that. You could try to make short-term money here by betting with the zombies, or you could sit back calmly, let the zombies do their thing, go in and kill them and take their money. That's what I do. All right, so let's see what happens. I'll talk to everybody later. Bye-bye.